Quick daily market analysis for Tuesday, March the 31st, the final day of the first quarter there, and stocks bolted out of the gate there. That's as traders and investors were buying the dip on news that the Trump administration said they were going to look at wrapping up the conflict with Iran. And later we had another leg up in the afternoon as it was confirmed that Iranian authorities were wanting to come to some sort of agreement with the Americans to resolve this conflict. More positive news today, we had a consumer confidence reading out showing that the reading came in much higher than expected at 91.8. That's against the 87.9. So a good metric there coming in, giving a little bit of positive sentiment, even though we're kind of getting drowned out by a rising oil price. Obviously, the macros are still intact with the American economy, even though, as I say, we're having that late quarter pressure coming in there from the oil price. And over to European markets, where stocks rebounded again for a second day, again on the back of traders and investors buying the dip there with positive news that the conflict with Iran is coming to a close. We did have a reading out on German unemployment there, coming in much better than expected there. They expected a increase of 2,000 adds to the unemployment figure. In fact, it came in unchanged, so that was a positive move there. However, the current performance there for the first quarter is the worst performance in European indexes since 2022. And over to UK markets, where stocks rose almost 1%. That's on the back of, mostly in the back of the energy sector. We did have a reading out on the first quarter GDP coming in at 0.01%. It is showing that the UK economy is still struggling there, flatlining growth. That's on the back of data out showing that retail prices are continuing to rise because of the rising oil price. Obviously, now we're getting into an environment in the UK where we are seeing stagflation. And lastly, over to Canadian markets, where stocks powered ahead almost 2%. Most of that was on the back of the energy and the financial sectors. We did have a reading out on January GDP growth coming in at 0.01%. That is better than economists and analysts forecasted at no growth at all. But it is showing that the growth is still quite stagnant there in Canada after two previous months of growth there. However, we are seeing rising prices there because of the oil shock there, which is expected to reduce further growth going forward.